going on? What's going on? Welcome back to another episode of Take Profit Tuesdays with your host, Yvonne Stewart. And as always, guys, I'd like to start each and every single one of our videos as a weekly basis, as a disclosure and a friendly reminder. Again, guys, this is not financial advice. The markets are very volatile. If you do not have experience investing in the market, please, please seek a professional, someone who is licensed by institution, who's also collecting fees, structure fees, whether it's high, small, or low, whether you could catch them or not. Those are the professionals. Those are the ones you're going to talk to, sit down with, have those nice long meetings with, talk about your portfolio, them kind of decide where your portfolio goes. And you kind of, paying their lifestyle as well. But on this channel, guys, we kind of teach the education aspect of it, how to kind of be an independent investor, just the bare bones. We don't get to the too nitty gritties just for the sake of time. As well, like I mentioned before, guys, I am the founder owner of VaniFX, where we offer 3 products. As of right now, we offer the signal service. We offer one-on-one train education, sessions, and we also have a crypto fund management as well. So if you guys are interested in any of those things, want to learn a little bit more in detail, shoot me in the comments. Hit me directly in my Gmail or the business Gmail. You guys hit me up there for any inquiries. And yeah, as always, as I like to talk about in each and every single video, guys, the 4 pillars that kind of took us where we are today, as far as just the whole being a great trader. And if you want to be great, you have to master those 4 pillars. And if this is your first time joining, make sure you like the video, make sure you sub. The 4 pillars that we always talk about in each and every single video is: 1, you need capital; 2, you need the strategy; 3, you need the risk management; and 4, to wrap things all up, you need that psychology. So, and again, I'm not gonna go too much detail on each one of these aspects. Why these low dots or price tags are here? Well, if this is your first time jumping in, take some notes. So again, if you haven't watched any of the previous videos, again, make sure you sub, because we do these we attempt these videos on a weekly basis. Again, each price tags are times that both S&P, we're growing a crypto fund. Crypto. S&P, we're just buying at the lows, looking for the opportunity to buying when it's cheap, and build this portfolio to eventually do some option trading, so we could start shorting some money, right? We all want to make money when the market is going down, don't we? Yeah, show of hands, yeah, you, yeah. So yeah, that's the reason why we're doing this, not just for my sake, but for those viewers who are out there, who want to at least, get your feet wet. This is not like a quick money thing. This is a long-term game. So if you're following me into this long-term game, you'll be making money with me long-term. So it only makes sense to just follow long-term, right? Yes, we're going to talk about, in the future, probably some scalps, probably some, some swing trades, so on and so forth. That's something that we do in the education, guys. So that's where you got to get a little bit more involved in education, right? Every once in a while, I do talk about trades that me and my team has won or lost, kind of break it down a little bit more. Just get a little bit more details, just throw some nuggets at you guys. So again, make sure you, as a smart student would do, like the video, comment, subscribe, right? Get the video out there. And also support too. Don't forget to do that. That's that's a good way to get, your ROI up. So anyways, back into what we're looking at in front of us. So last week we were kind of in this little bubble right here, making higher highs from this point, and I believe we're up about 3% overall. I'm not gonna check the account right now. Like I said, it's Not something I'm worried about. Something I'm, kind of just building. Um, as of right now, like I said last week, we were kind of like a 3% gain each time. We're almost at the first time we bought the S&P together back in April, fam. We're now in August, fam. So it's been a couple months, fam. Which is why I emphasize this to you guys. This is a long-term game. We're not trying to make quick money. This is why we have the 4 pillars. So again, if you ask yourself, oh damn, how was he able to make 3% in what April's, but let's say 5 months, whatever. Cause I studied this, guys. This is what I do. And this is why you have to be a part of the team, the part of the programs, and get involved and get your, learn something. Cause this could be your easy savings account. A lot of places, a lot of banks, they have CDs, terms where you could put your money locked away for 6 months, and you can't even make a full percent. We literally just made 3% in 6 months. And this could be your little CD. Let's say it's $1,000. You could like 200 right here, 200 right there. You do 205 times, and boom, you're up 3%. Name of the game. So with that being said, now let's talk about what happened and what's going on. This is gonna be a relatively short video. I got a couple things I gotta do later, but yeah, we're gonna dive in deep. We're gonna dive in deep. A couple things I want to talk about as well, as by the title. So, here. So the reason why, and I was kind of watching. I made this around Sunday, and it was kind of like around right here, right before market open, the other day, yesterday. So in my head, I'm thinking, all right, one or two things could possibly happen, right? It could either continue, react off the zone, make some higher highs. Yes, I'll be more in profit, boom, bada bing, bada boom, which is good. Or it could do what it's doing right now, and it kind of broke the trend, which is cool. As investors, we're not really upset about that. That's an opportunity right there. So now, right now, guys, we're kind of looking at two zones. They call it the golden zone, right? And just to give you guys little nuggets here and there, like I always say, guys, make sure you like, comment, and subscribe so you can get these videos pushing, and you guys can get some of that education going. We're looking for that golden zone, as I like to call in this industry, but there's only really 2 points I'm really focused on, and I'm gonna be kind of definitely prepared for this, because we kind of reached a dip, and we settled a little bit long. This is where we kind of accumulated. And other people teach us as well, this accumulation, distribution, all these theories, right? But you have to just look at it as like waves, or you could take a combination of all these, and put it to one piece, which is again something that we teach. You kind of make it your own way. There's not one way to trade. There's many ways. You know what I'm saying? So, with that being said, as you could tell now, came down, we distributed, kind of accumulated, came back down, we accumulated right here, as you can see, straight sideways, and we're coming back up to the wave. So now we're kind of doing a little pullback, and the best thing about that is, let's see if I can delete this. The best thing about that is this is perfect for opportunity to buy, right? So now with this Fibonacci that we're going to use, we're going to break it down to where we could get some more opportunity. And the best thing about it, I do have to say, is that we have not only just one but two, if not more, opportunities, right? So this is something you gotta be prepared for, guys. This is something to be prepared for, because if you miss this and you're like, I don't want to buy because price is too, it's gonna keep dropping. I mean, it has to keep dropping. I mean, you don't really control it. It's gonna do what it's gonna do at the end of the day, based off the economy, right? So now, This little industry for you guys. Oh, sorry, not industry. Just a little, nugget for you guys. This right here. But respectively, these are the 2 points where we could expect the S&P to get some more buyers in, react, and continue to make higher highs. Long story short, um, yeah, I might buy. I'm actually gonna get ready for this one, and I'll be open honest with you guys. This full disclosure: Lee's gonna buy soon. Oh, Lee, why are you gonna buy soon? Is it too early? No, it rallied up, right? Slowed down the pace. I'm gonna wait till it gets cheaper, and it's getting cheaper as it was. So I'm gonna buy a cheaper rate, and as it makes higher highs, I'm gonna make more money on top of the money I made, more money on top of the money I made before, which is what we want to do, right? So I'm gonna finish that there. So again, guys, if you're not paying attention, just this is on the daily, by the way. So this might take a couple days. You don't have to buy it right now. You don't have to jump in at this very moment. But I'm gonna let you know that by next week, if it's not, hit this point or this point, or even below, even back to where it was before, I'm still gonna probably buy more on top of that. So that's just me. But anyways, it's not financial advice. If you're not able to withstand the markets and its fluctuations or not master the 4 pillars, please seek a financial advisor who is licensed by a financial institution, got regulated by the FDIC, not FDIC, FRNA, who and also the SCE, or SCE, and yeah, those are the guys you don't want to talk to. All right, so so now we're gonna talk up a little bit about potential Fed hikes next month. I might actually go a little bit deeper into the DXY a little bit, and I'm kind of upset, to be honest with you. But can't put our emotions in these markets, man. We got to play the game. All right, so this article is titled "J.P. Morgan Strategists See Last Big Fed Hike in September," and that's something I highly, highly, highly doubt. Yo, shout outs to Sagarika J. Shout outs for the article. This is a nice picture of the getting pricey tech stocks. Valuations are back above the 10-year average. So this is the 10-year average, that line. So it's getting above the average. Ooh, that's cool. Tech stocks. Anyways, so the Federal Reserve is likely to deliver the largest big rate hikes in September, setting up stocks to continue rally. Rate hikes has definitely helped the stock market. So, but as far as inflation, no, not so much. Or the valuation of the dollar itself, not so much. I mean, it's still overbought. So next we expect another oversized Fed hike in September, but post that we would look for the Fed not to surprise the markets on the hawkish side again. No, we want that. Some of us strategists, led by wrote in a note on Monday, they expect the trade-off between growth and monetary policy to improve from here on, and help the overall market to keep recovering, quote unquote. The strategists are among the most bullish top market voices on the U.S. equities and expected rate-sensitive growth stocks to maintain their overperformance over the value basket, and even as investors remain worried that the Fed could remain on the hawkish side, which is what we want. We want everything to be bullish. I mean, if you're not in it yet, I mean, obviously you don't want to be bullish right now, but in essence, those who are invested or already invested, they want things to be bullish. So we'll just wrap it up with these two. And we might end the stream, talk about the dollar a little bit. Mixed signals from Fed officials last week on the outlook for rate led the S&P to snap a 4-week winning streak, which is what we want. The main underlying indexes were set to resume declines on Monday, with Nasdaq futures falling 1.6% and S&P contracts down 1.2%. A Bloomberg survey found that on average, top strategists see the S&P rally another 3.5 from current levels to the end of year, which is pretty good in my opinion. All right, so let's talk about something a little bit off topic, right? Let's talk about different ways you can invest your money aside from the market, right? And Mitt Romney, a billionaire with a B, um, says a billionaire tax will trigger heavy demand for the. One second, guys. Sorry about that, guys. A little interruption. So he says the tax will trigger heavy demand for these two physical assets in not get land, and this is interesting. So I'll zoom in because I know some of you guys can't see, kind of on the blind side, right? I don't know. So we got farmlands. It's no secret that the ultra wealthy loves farms. If you guys haven't noticed already, Bill Gates, the fourth richest person in the world, with a net worth of 123 billion with a B, is the largest private farmland owner in the U.S. That actually means a lot, guys. He's heavily invested into U.S. farmland. And Romney expects more fat cats to plow into the space. So why do you think they're investing in real estate? Because it's not as fluctual as the stock market. These multi-billionaires are gonna look and say, I don't want to invest in the stock market because that goes up and I gotta get taxed, which is true. So a lot of them use the 1090, no, not 10, I think it's a 1031 tax transfer of assets with the real estate. So for instance, if you buy real estate, you have for X amount of years, you sell it, you could take those funds and buy another asset of real estate and not get taxed off that transfer of, sell off that sale, which is beneficial because you could keep growing your money until you want to, officially retire from it, or put in a trust, or hide the money in certain ways where you could avoid those taxes. This is something that the rich and wealthy does. So you guys should really educate yourself in those kinds of things. It's actually very useful. So it continues. So maybe I will instead invest in a ranch or in a painting or things that don't build jobs or and create a stronger economy. It's easy to see the appeal of farmland. It's intrinsically valuable and has little correlation with ups and downs of the stock market. This is very true. And even in hyperinflationary environments, people still need to eat. Very, very true. And people also need to live as well. So between 92 and 2020, farmland returned an average of 11% per year. Over the same time frame, the S&P returned 8%. So you obviously can see a greater return on investment from the farmland as opposed to S&P, right? So, really quick, just want to talk about the dollar. Shout outs to the feds. So what do you guys see? I see dollar still rising, which is not necessarily good, in the sense of it's severely overbought. We kind of need to kind of tape down a little bit, where that arrow's going, get back to some normal levels, kind of slow down inflation. But yeah, we'll see what September brings. Hopefully it brings brings the hammer down to some peace. But anyways, just want to thank you guys for watching the stream, watching the video. If you're watching the replay, again, like the video, comment, subscribe, say something nice. But yeah, we got a lot to go through, man. These next couple weeks, months, we're gonna make a lot of money, man. I could just sense it. So make sure you guys get jumping and involved. Hit me in the back end, and yeah, let's grow. But anyways, I'll see you guys in the next video next week. Peace.